All right, happy Friday and also happy early 4th of July. Oh man, I can't wait until tomorrow. Gonna eat some good food, gonna spend time with family and friends. Hopefully you all are gonna be doing the same. If you are not in America, or from America, I should say, and you're not celebrating the 4th of July, well, whatever you're doing this weekend, I hope it's the best and hope you have a great time. But for me personally, oh yeah, gonna be dabbling in a very luxurious whipping out some filet mignon tomorrow night along with some lobster tail. I actually haven't had a lobster tail in a long time, so really looking forward to all of that good stuff. So, this video for today is going to be a little different because the US stock market is closed. Now, if you are subscribed to this YouTube channel, you get a wide range of content. Welcome if you are new and you just happen to randomly click on this video. I am a, I'm a jack of all trades here. Very much a jack of all trades. This is still a fairly brand new YouTube channel. This channel I created back in March of 2024. I was uploading until May of 2024, so about a couple months. I ended up having some pretty bad health issues. All of that got rectified. It literally came down that I was drinking way too much alcohol and eating too much fake food. Fully sober now, going on almost 2 years now, no alcohol, and of course, living a very free processed food, real food diet. So I started this YouTube channel back up, October, November of last year. And, my main YouTube channel, Nightmare RH, it's a video game channel, 200,008 subscribers currently, on its way to 209 very soon. My video gamer, views or people watching, they really don't want a lot to do with the stock market. And I was actually on vacation this past weekend out of state, and I was actually asking, I'm a very chatty human being, very easily can make these videos turn into 20, 30 minutes long. Gonna try to keep today's episode very much under 20 minutes, but, when I start talking to people, I, basically pretty much, hold on one second. Damn it! Oh, man. Normally I don't edit around here, but I actually do got to reply to a text message. Hold on. Okay, and, like I was saying before, okay, so, just totally lost my train of thought. Oh, man. I'm a real person here. If you subscribe to this YouTube channel, you're going to be getting real content Monday through Friday, and if you enjoy these videos, definitely smash the like button. I'm going to be starting to do some live streams on this channel, definitely around when the market closes, when the market opens, because I definitely am going to be having a lot more free time. So I gotta do a bunch of live streams on my other YouTube channels, but I do want to shift focus and really dive into a lot of streams, especially on this one as well, too. But otherwise, for today's video, since the market is closed, I kind of really want to talk a little bit about TradingView, setting up some charts, really why I use TradingView, because I do understand that if you are new to the market, not really understanding some charts may seem like hocus pocus, especially if you are looking to, be a long-term investor. But, I mean, I'm a long-term investor in SoFi, but I didn't start buying SoFi until it broke $25. Why is that? Because when SoFi broke $25 6 months ago, it triggered a evaluation change of the company, which means the evaluation is becoming much more attractive. When SoFi was at all-time highs 2 quarters ago, it was overbought. It was trading way higher than it should be. Now, SoFi, honestly, SoFi around these levels, anything below SoFi, anything below 20 bucks on SoFi, in my opinion, right now is a buy. I'm just loaded up with SoFi shares up the wazoo. I've been doing my buys, but, let's say hypothetically, if I did not have a position in SoFi, I mean, yeah, 18 bucks, sure. When rate cuts do happen in the future again, you're talking maybe 6 to maybe 12 months, or just rate hikes get squashed, you're going to see a company like SoFi very, very much recovering to all-time highs and going past all-time highs. Oil last month was still near $100, and now we are way below very key pivotal levels. So the thing about it is that you got to understand the charts. 2020 March, I got into the market, but I had such an advantage because I got into the market because of Rona. I saw a once-in-a-lifetime opportunity that I ended up taking. I could have very well walked away in 2022, and I thought about it. 2020, 21, I made life-changing money. Took a little bit over 6 figs to multiple 6 figs in profitability. I mean, I'm retail. I'm not Wall Street big money here. When you are dabbling in hundreds and hundreds of thousands of dollars of profits, that is life-changing money. And I thought about walking away in 2022, but I'm so glad that I did not. 2022, I learned everything about fundamental analysis, how to value companies. I learned everything about technical analysis, what you see on the screen. And since 2022, it was around February, I've been using TradingView, and I've been utterly very, very blessed for the amount of knowledge that I've gained, and also understanding that this stuff really does matter. So I do want to go ahead and show something that TradingView is doing and how I actually use TradingView. I'm not being sponsored by TradingView whatsoever. I don't have a coupon code by all means. If you are taking this seriously and you want to actually use TradingView, you can very much use Yahoo Finance. That's even like older than TradingView. Webull by all means has a complete, like, if you open up a Webull account, you can get the same moving averages and everything. I just preferred to have TradingView. I prefer to have Webull, and I also prefer to have Robinhood as well too. I have multiple stockbrokers, and I like having multiple charts, and I'm also surrounded by about 4 monitors right now. I got 2 laptops, and I got 2 dual monitors, literally surrounded by technology. But if you're gonna be doing this, and by all means, do you need that many laptops or whatever? Hell no. Hell no, hell no, hell no. I have literally day traded using my phone, okay? I have literally been in bed because I've had such a bad migraine. I get migraines occasionally once in a while. And I was literally laying in my bed at like 10 a.m. I was completely just out of it. And I'm literally on my phone, and my phone is like in a distance, and I'm literally using Webull, or I'm even on my Robinhood, basically trading stocks, okay? You don't need a setup like this at all. So if anybody tells you you need multiple monitors, the answer is no. But I'm a technology guru. I just turned 38, so I mean, I've been using technology since I was friggin' like 12, 13 years old. Computers, that is. So, TradingView, I have the most premium edition of TradingView, and I buy it every single year very cheaply. If you go on TradingView, you can actually subscribe to their discount newsletters. And I remember back in 2022, I was actually subscribed, and I was using the free version of TradingView. And then I ended up seeing a deal where they're doing a massive discount where you get a annual discount. And these discounts are literally just like crazy. Absolutely crazy. Black Friday, Cyber Monday is also when I typically renew. So my subscription on TradingView is essentially 1 year every Black Friday. But you're talking about like $400, $500, $600 a year for the most premium edition on TradingView. I can go ahead and get that for like a couple $100. That's a pretty good deal. So understand, first of all, TradingView is way overpriced, which is why they do these massive discounts. But you don't need the massive discounts to really have like your chart on the screen. On TradingView, you can basically have different moving averages. You can have different indicators. If you are using the free version of TradingView, I believe it's only like 2 moving averages you can have at one time. That's the catch, though. You can only have those moving averages at one time. So theoretically, you could very well remove certain moving averages, and you can also edit certain moving averages on the screen as you're maybe trading or buying a stock, and that's one way you can really bypass it. However, one indicator that I really feel is very much needed, especially if you want to look on something zoomed out, and I'm talking about something like on the weekly chart, or even the daily chart, where all these candlesticks is one day, is really the relative strength index, the RSI. If the relative strength index is above 70, it's overbought. So that means that, hey, this stock is trading, very rich. But here's the catch, and this is where technical analysis fails, okay? If the fundamentals are there, such as AMD, if we go ahead and look at AMD, you look at AMD, the RSI is 52, that's utterly beautiful, but then you start plugging in the moving averages of like the 50-day, the 100, the 200-day, we're still very, very high above the moving averages. And then if you go back to, let's say, the weekly chart, which is even more zoomed out, you look at AMD and you're like, man, this stock is overbought. Like, it's insane, right? If the fundamentals are there, technical analysis, it becomes a lagging indicator, okay? Do I think AMD is going to go all the way down to $263? I mean, if AMD went down to $263, there would have to be something wrong with either the company, or we would be going into a stock market full-blown crash like last year on Liberation Day, okay? So this is where technical analysis really, it lags. It's not good. Now, if we go to SoFi, and we look at SoFi very much, let's say, at all-time highs back in November of last year, well, back in all-time highs, a couple things. One is that the RSI was actually not really in overbought territory, but do you know what was in overbought territory of SoFi back in October, November last year? The fundamentals. SoFi was trading at, I believe, like a 60 times for a PE, like price to earn, like you're talking about on a company like SoFi that is theoretically a fintech and it's also being valued partially as a bank. If SoFi hypothetically was like a Palantir at one time was trading, I believe, like 150 times, like it's like 2 earnings. Like that is a technology-based company. Do you know what also trades very rich? Tesla. Tesla trades very rich. SoFi? No. SoFi is not going to trade rich, okay? If you are buying SoFi, you're buying it for the future, okay? AMD can trade rich. Palantir can trade rich. Other AI companies can trade rich, okay? Nvidia was actually trading very rich during 2023-24. Extremely rich. SoFi is not going to trade rich, and that's something you have to understand, and you have to know this when you get into these stocks. $25 was a very big area for me. When SoFi broke $25, this entire falling knife here, I was buying. I bought this entire knife all the way down, and I continued buying. That's how I know SoFi was so overbought, is because they came down so quickly. Now, obviously, we had geopolitical BS. We had a bunch of concerns. But when a company is very overbought, overpriced, when you get a geopolitical event pretty much happening to you, aka the stock, the company, that stock in that company is gonna very much plummet down. very much plummel down to go down to Chinatown, okay? So going back to really TradingView, why do I use TradingView the way that I do is because I want to see different things. But the RSI, the Relative Strength Index, that is great to actually have. I believe on the free version of TradingView, you can only go ahead and have one indicator at a time. You can definitely swap out the RSI, and you can also swap out the MACD, Moving Average Conversion Diversion. The MACD is the second favorite indicator that I really like to use. And what the MACD really shows is pretty much momentum. A lot of it is very much volume-based, and a lot of it is very much more fluent with just saying, hey, we're seeing a lot of like push higher, a lot of volume, a lot of momentum. We're getting a lot higher highs. We're not seeing like pretty much a downward cycle anymore. And it can also really aid to your benefit because it kind of really mirrors pretty much like the stock price. Like on the MACD, if you can see on the screen here, let me go ahead and see if I can actually zoom in on this part right here. On the MACD, you basically see a gigantic momentum very much down here. And if you notice on the charts, this entire big momentum of SoFi, basically SoFi from June of last year just went on a utter push higher. And if you are day trading stocks, like you're looking at stuff on the 1 minute time frame or on the 5 minute time frame, things just move quicker. Obviously, if you're looking at stocks on the daily time frame, things move a lot slower. But that's why I love looking at the MACD, is because I can say, okay, we have so much momentum happening right now. We're just being pushed up higher and higher and higher. Eventually, we're going to come down, okay? The indicators, the moving averages, they have to catch up. And on SoFi, they definitely have caught up, because now the MACD on SoFi right here, well, you basically see the MACD has fully reset. So we could very much get a gigantic push higher on SoFi going into earnings, past earnings, going into the end of the year. It can be really, really good. So the MACD, I would highly encourage anyone to really use. You can use the MACD for long-term investing. You can use it for short-term investing. You can use it for very like short-term trading or even day trading. It's how you really look at stuff. Whether you want to view stocks on the daily, I believe the premium version of TradingView, don't quote me on this, I think you can actually view on the 1 minute, or you can view like different types. But I'm pretty sure the free version, you can definitely view stuff on the 5 minute. You can view stuff on the daily, maybe even the weekly as well too. On Webull, I believe, on Webull, I'm almost, oh boy, I got my Webull account locked here. Hold on. I believe on Webull, yes, you can actually view 1 minute, you can view 5, and you can go, okay, so yes. If you don't want to use TradingView, by all means, you can definitely use Webull. No, I'm not being sponsored by Webull too, but I just personally, I love using Webull. It really sucks how Robinhood really doesn't have a great system, kind of like Webull and also TradingView as well too. You can get TradingView on your cell phone. Another good thing about TradingView is that you can set alerts. I use these things a lot. Add alert on SoFi. If it crosses up, crosses down, it basically sends a notification to your cell phone, to your desktop. The different type of moving averages that I use. So if I'm looking at stocks in the 5 minute or the 1 minute, I like to use exponential moving averages. Exponential moving averages are very different. They follow very much momentum in a way. So exponential moving averages I like to use is the 9, the 21, the 48, and the 200. The person that actually taught me how to do all this stuff, because I did go to kind of like a boot camp academy many years ago, and the the millionaire that taught me all this stuff legitimately uses these types of averages for trading. If I'm looking at stuff honestly on a zoomed out perspective, I'm going to be doing simple moving averages, SMAs, not EMAs. I'm going to be doing the 50, the 100, and the 200. You could throw in the 10-day moving average, which is momentum as well too. If you want to really know the differences, I actually did ask AI here to actually give me a definition difference, just so you guys know that I'm not pulling this out of my ass. And please, by all means, fact check everything that I say in today's video. So here's another really good thing too. I like using the Keltner channel, which once again is very much based for momentum trading as well too. And it could also be momentum investing as well. But if you're looking at stocks on really the daily time frame, even if you are day trading, even if you are swing trading, you can really see how far your stocks are really going to run. And the Keltner channel is very much different than a lot of certain moving averages. Obviously, the Keltner channel is made up of 3 sets of averages. The Keltner channel is this blue line here, and then you have the upper Bollinger Band and the lower Bollinger Band. Stocks tend to really hover around either the upper or the bottom, and it can tell you when a stock wants to really break out. So right now, SoFi is very much above the Keltner channel, or the Keltner average itself, and we definitely have room to push higher. Definitely go into the high $19 into maybe $20. And then you look at the Keltner channel at itself, and it kind of looks like it's pointing like upward. A lot of people that do options, they use the Keltner channel. I've used the Keltner channel before when it comes time for options. This is definitely really good for anyone to really have. But going back to really the Keltner channel, so Keltner channel is a volatile base envelope that uses 20-period exponential moving averages, EMAs, as the middle line, with the upper band set as the multiple averages, average true range, ATR. In contrast, simple moving averages, MAs, are standalone lines used to smooth out price action over historical periods. So it's very momentum in a way. And SoFi, it could very much be a momentum stock to the upside or to the downside as well too. Features. So the Keltner channel versus 50, 100, 200-day moving average. Hold on, my laptop is about to die. Oh boy, gotta plug it in. Okay, we are good. Indicator type, volatility, trend envelope. If something is moving very, very quickly, I prefer to use the Keltner channel. If something is moving very slowly, then the 50, 100, 200-day might be better to use. Visual structure consists of 3 lines, midline plus upper and lower bands. Single line on the chart for the 50-day moving averages calculation uses a 20-day period EMA. And then obviously the 50, 100, 200, it's a simple moving average. So it basically calculates, the simple moving averages calculate pretty much every single day. Exponential is a little different. Bandwidth is dynamic. And then you go to the 50-day, it's pretty much fixed. Detailed breakdown, Keltner channels provide visual envelope around price action. They are used to identify the trend direction, overbought, oversold levels, and potentially breakout points, as much as asset fluctuation in the short term. A lot of people that do options, a lot of people that do day trades, short-term trading, very much use Keltner channel. As for the other 200, the 50, 100, 200 day, a clean singular line to help traders identify prevailing long-term or medium trend lines. For example, when a price stays above the 200-day moving average, it is generally considered for a strong bullish environment. Very true. The math behind Keltner channels, exponential moving averages, usually 20 periods, weigh recent price heavily. Outer bands, commonly the average, means the channel is widened. So basically, pretty much, Keltner channel, all you got to really know, momentum trading. Are you looking to do momentum trading, or are you looking to do a longer position? If you're looking to do a shorter position, using the Keltner channel could be your best friend. If you're looking for something longer, the 50-day, the 100, the 200-day is very much for you. How traders use them together. This is what I do, okay? What I do is exactly this. Combine both tools. For example, a trader might look at the daily chart to see if the asset is trading above the 200-day averages to establish a long-term buy basis. Once the long-term trend is confirmed, they will use the Keltner channel to fine-tune their entries. That's what I do. So I use both of them for short-term and long-term. SoFi, obviously, I'm using both of them for long-term trading. I look to see if SoFi is no longer getting momentum, and then I'm like, okay, yeah, this is actually a really good entry point. So understand that I don't believe Webull actually has the Keltner channel, and this might honestly be something just for TradingView. But, I mean, overall, at the end of the day, if you are going to be doing this, look for deals on TradingView. Look for deals for other, apps and software. You can get all this stuff on a discounted price like I do every single Black Friday, Cyber Monday. Like I was pretty much saying, TradingView right now is doing their 4th of July pretty much sale and stuff, which is pretty awesome. So, if this video helps you all out, hopefully it does. If you want me to cover a different type of lesson, definitely let me know down below. I always do love teaching educational content, and I don't plan on charging for my educational content. All the stuff that I've learned, I really want to pass down to you all. Probably next educational video I'll make is probably going to be around fundamental analysis, since I pretty much went over technical analysis for today. But otherwise, yeah, stay motivated, everyone. Happy early 4th of July. Once again, I won't be making a new video tomorrow. Might be doing a video on Sunday, not entirely sure. Otherwise, stay tuned for Monday. We're going to have an exciting next week. I can't wait. All right, later.